All right, let's dive right in, shall we? We're taking a deep dive today into Westlife Foodworld Ltd's second quarter financials for fiscal year 25. And we've got like the whole toolkit. We're looking at company announcements, those fresh financials. We're even peeking into their earnings presentation, to get the full picture. So by the end of this, you'll know how Westlife's really doing, the moves they're making out there in the market, and maybe even get a glimpse of what the future holds for them.
Well, it's funny you should say that because Westlife, actually, they just released these results, like just on October 24th. So, yeah, we're working with really, really fresh data here.
Oh, hot off the presses, huh? All right, so paint me a picture, big picture. How'd they do this quarter?
So their total revenue hit 618.48 crore. Now, at first glance, that might sound pretty impressive, right? But it's actually just a teeny tiny, like 0.6% increase compared to the same time last year.
Hold on, wait, a tiny increase? But didn't their same-store sales growth, that SSG everyone keeps talking about, didn't that actually drop, like a whole 6.5%? That seems like a pretty big deal.
You're definitely right to flag that. SSSG, that's a big one. It's like a heartbeat for the restaurant world, really. It tells you how those existing spots are doing, taking out the noise from all the new places they've opened.
So, like, a dip in that SSSG, does that mean people aren't loving Westlife like they used to? What's the deal there?
Yeah, we'll definitely get into those factors, unpack it a bit later. But first, let's break down this revenue picture, zoom in a little. A big chunk of it, we're talking 615.36 crore to be exact, came from what they call sale of products. Basically all those classics. Burgers, fries, stuff we all know and love.
Yeah, right. It makes sense. It's like their bread and butter, right?
Exactly. That's the core, right? But then they also had this net gain of, get this, 27.28 crore. And it came from fair value changes, which sounds a little complex, but essentially, it's like the value of some of their stuff, their assets and liabilities, going up or down over time. And then on top of that, there's another 23.74 crore from other operating income, which could be things like licensing fees, royalties, that kind of thing.
Interesting. So their revenue, it's a bit more than just, burgers and fries, huh? But what about their profitability, bottom line? Did they see any gains there?
So that's where things get, maybe a little less exciting. Their operating EBITDA, which basically tells you about their core profitability from all those operations. It actually took a bit of a hit this quarter, down 20.7% year over year. And that's a number that investors watch, like really closely, to see how healthy the company really is.
Whoa, 20.7% down. Yeah, that's a pretty big drop. What could be causing that? Like, what's going on there?
So a couple of things could be at play here. One thing to consider is this concept of operating deleverage. Imagine, you have a restaurant and your rent's the same every month. When you're selling a ton of burgers, that rent gets spread out over all those sales, right?
Yeah.
No big deal. But if your burger sales slow down, suddenly that rent's a much bigger part of your expenses compared to what you're bringing in. That's operating leverage in action. Or, well, deleverage in this case.
Right. So fixed costs, they become like this bigger burden when sales aren't as strong. Okay, yeah, that makes sense. But are there any other factors that could be, impacting Westlife's profitability here?
Oh, for sure. Yeah, definitely. Another possibility is that the royalty costs they pay to McDonald's have gone up. Remember, Westlife, they're running McDonald's franchises over in India, right? So they got to pay a cut of their revenue back to the big guys. If those fees have increased, well, that could definitely be eating into their profits.
Okay, so we're seeing a little bit of a mixed bag here, right? Like slight revenue growth, but then this pretty significant drop in operating EBITDA. So what's really driving those trends? Let's dig a little deeper there.
Now, the company itself is pointing to subdued in-store sales as the main reason behind that dip in SSSG. Their off-premise business, that's all the delivery and drive-through stuff, has been holding up pretty well. Seems like people still love their McDonald's on the go, But they're not quite back to pre-pandemic levels of dining in.
Yeah, that makes sense, right? I mean, we've all gotten so used to the convenience of ordering in. So it seems like that shift in how people are choosing to get their McDonald's, that's having a real impact on their bottom line, right?
Absolutely, yeah. And that shift, it could have some pretty big implications for Westlife's strategy moving forward. It's like they need to figure out how to get people excited about coming back to the restaurants.
Yeah.
But also make sure all that delivery and drive-through stuff is as smooth and appealing as possible. It's a tricky balance,
Yeah, no, it sounds like it. But they're not just sitting around waiting for things to change, are they? What are they doing to, adapt and boost their performance in this new world?
Well, they're focusing on two main areas, what they're calling value platforms and product innovation.
Yeah.
Basically, they're trying to, lure customers back in with good deals and exciting new stuff on the menu.
Okay, now this is where it gets interesting, right? They just launched something called Everyday McSaver Meals.
Hmm.
That sounds like a pretty direct play for, those budget-conscious
Oh,
customers.
yeah, for sure. It's a smart move, especially these days. Everyone's
Yeah.
watching their wallets a bit more carefully, right? And it seems to be working. They've seen a little jump in customer visits, especially towards the end of the quarter, which lines up pretty nicely with the launch of those McSaver meals.
Okay, that's a good sign, right? But value can only take you so far. What about this like product innovation side of things? Any like exciting new additions to the menu?
Now, that's where they're getting creative, right? They're rolling out this new core platform. They're calling it McCrispy.
Yeah.
And they're timing it, like strategically, for the upcoming festive season in the December quarter. Seems like they're betting on this new offering to really drive those sales, doing what's usually a busy time for the whole industry.
Oh, crispy.
Ah,
I like the sound of that. But hold on, I also saw something about a multi-millet bun in their reports. What's that all about?
Now that's interesting, isn't it? They've introduced this multi-millet bun as part of their, get this, real food, real good platform. So they're tapping into that whole health and wellness trend that's really taken off. This could be a game changer, especially if it brings in a whole new group of customers, the ones who are looking for like healthier fast food options.
Yeah, right. Smart move. I mean, offering those healthier choices, it could really set them apart from the competition. It's fascinating how a simple change like that to the menu, it can reflect this like bigger shift in what people want and how a company responds to that.
Well, absolutely. And it also ties into their brand image, right? By offering healthier options, Westlife can position themselves as a company that cares about their customers' well-being.
Yeah.
That can have some pretty big positive effects down the line,
Hmm.
like building brand loyalty and boosting their overall reputation.
Right. Yeah, that makes sense. So they're trying to, win back customers with value,
Right.
entice them with new stuff on the menu, and even appeal to, the health conscious crowd. That's pretty smart. But let's not forget about the whole digital world. It's such a big part of the fast food experience these days. How's Westlife leveraging all of that?
Oh, they're definitely not ignoring the digital space. No way. Actually, digital sales, they make up like a whopping 72% of their total revenue. That's huge, right? A huge chunk of their business happening online. And their Me McDonald's Rewards program, that's playing a key role in that success. It's all about keeping people engaged, encouraging them to order online or through the app.
So they're not just a burger and fries company anymore. They're like a tech company, too. They have to be these days, right? Adapt to the digital world just like everyone else. But while they're busy conquering the online space, they're also expanding their physical presence pretty aggressively, aren't they?
They are. They're really going for it. They added 8 new restaurants just last quarter alone, bringing their total to 408 stores across 66 cities in India. And they're not slowing down anytime soon.
Wow, 8 new restaurants? That's a lot. What's their strategy there? Are they focusing on any particular regions or, types of stores?
They're looking at a few key areas. First, they're targeting South India. They see a lot of potential there. Second, they're moving into smaller towns, recognizing that the demand for fast food is growing beyond the big cities. And finally, they're focusing on drive-thrus, tapping into that whole convenience and on-the-go lifestyle trend.
Right, it makes sense to go where the growth is. Tap into new markets, cater to changing lifestyles. Smart move. But with all this expansion, they've got to be mindful of, their financial health, right? What's the story there?
Oh, absolutely, you're right. Expansion, it can be a bit of a double-edged sword. It can drive growth, but it can also put a strain on a company's finances. And in Westlife's case, their gross margins actually dipped this quarter, mainly because of the rising costs of fresh produce. And that could impact their profitability down the road if they don't manage it carefully.
Hmm. Is that something investors should be, worried about?
It's definitely something to keep an eye on, for sure. It's probably just a temporary blip, because of how the market's fluctuating. But it does highlight how vulnerable businesses are, especially in the food industry, to things like inflation, those external factors. It kind of raises the question, how will Westlife navigate all these cost pressures and still hit their profitability goals?
That's a good question, yeah. Well, they are actively working on improving their profitability, right? They've set some, pretty ambitious targets for themselves.
Oh, yeah, they have. Their long-term goal is to reach an operating EBITDA margin of 18–20% by 2027. That's a pretty big jump from where they are now, at 12.8%.
That's a big leap for sure. What makes them think they can, hit that target? What's their plan?
They seem pretty confident in their strategy. They've got a three-pronged approach. The focus on meal deals, like those McSaver meals, to attract those price-sensitive customers. Their omni-channel approach, combining the digital and physical presence, meeting customers wherever they are, and their aggressive expansion plan to tap into new markets. They believe these three elements will all work together to drive growth and boost profitability.
So it's like a balancing act, right?
Well,
Keeping costs down while also investing in growth and innovation. Sounds like they have a clear plan, though. And it seems like investors are buying into it. There's a lot of positive buzz around Westlife's performance.
there is, yeah, you're right. But it does raise a question. Can they keep this momentum going? Especially with the economy being, a little shaky right now. Inflation's a big concern. And there's even talk of a potential recession down the line.
Oh, yeah, that's a good point. If people start tightening their belts, will those McSaver meals be enough to keep them coming back? And can their digital strategy keep up with the online world, which is always changing? Lots to think about there for sure.
Lots to think about. Yeah, you're right. It really makes you think about the challenges businesses face these days. They have to be like so agile, so adaptable, always innovating to stay ahead of the curve. It's a high stakes game, especially in an industry like fast food, so competitive.
Yeah, absolutely. And that's what makes this deep dive into Westlife's performance so interesting, right?
Sure,
It's like
right.
a little window into the bigger economic picture. With all the complexities and the uncertainty, we're seeing how a major player in the restaurant industry is responding to all these challenges and trying to figure out how to grow in the future.
Exactly. Yeah. And for our listeners out there who might be thinking about, investing in a Westlife, what's the key takeaway? What should they be paying attention to?
Yeah, what should they be watching out for?
Okay, here's what I'd say. Overall, Westlife's in a pretty solid position. Strong brand, loyal customers, proven track record of success in India.
Yeah, they're not like new to this whole game.
Exactly. They know what they're doing.
hmm
But they are facing some headwinds, changing customer habits, those rising costs we talked about, and a potentially shaky economic environment. All of that could impact their performance in the coming months and years.
So it's a bit of a mixed bag, like you said earlier, right?
Yeah.
Potential for growth, but also some risks to consider.
Exactly. Precisely. And that's where, the real analysis comes in. If you're an investor, you want to look closely at how Westlife's managing those risks. Are their cost-cutting measures actually working? Is their omni-channel strategy bringing in new customers and driving those digital sales? Are their expansion plans, well thought out and financially sound?
Those are all really good questions. It sounds like this deep dive has given us a solid foundation for understanding Westlife's position right now and all those forces that are shaping their future. But it's just the beginning, right? There's always more to learn, more to analyze.
Absolutely, yeah. We've just scratched the surface here. The real insights come from continuing to follow Westlife's journey,
Yeah.
paying attention to their reports, watching how their strategies play out, seeing how they respond to, the market, which is always changing.
And maybe even trying that multi-millet bun ourselves, for research purposes.
Hey, I'm always up for a little, culinary research.
So for our listeners out there, we encourage you to keep exploring, keep digging, form your own conclusions about Westlife Foodworld Ltd. It's a fascinating case study in business strategy, innovation, and resilience.
And who knows, maybe this deep dive has sparked an interest in exploring other companies or industries. The world of business is full of, interesting stories waiting to be uncovered.
That's so true. There's always something new to learn. Thanks for joining us on this deep dive into the world of Westlife Foodworld. Until next time, stay curious and keep exploring.
It really is. And, it could have some big, long-term impacts on their strategy. You know what I mean? They got to figure out, how to get people excited about dining in again. But also, at the same time, got to make sure those drive thrusts and deliveries are running super smooth, super appealing. Tough balance.
It is. It's a tricky one for sure. But I mean, they're not just sitting back and watching all this happen, are they? What are they actually doing to adapt and make sure they're performing well in this new landscape?
Well, they're focusing on two main things, right? What they call value platforms and product innovation. Basically trying to make those offers tempting, get people excited about new menu items.
Okay, yeah. So that's where things get interesting, right? They rolled out this everyday McSaver meals thing. Sounds like they're trying to directly appeal to the more budget conscious customer.
Oh, yeah, absolutely. A smart move, especially now with, everyone kind of watching their spending a bit more. And it seems like it's working.
Yeah.
They've seen like an uptick in customer visits, especially towards the end of the quarter, which, not coincidentally, lines up with when they launched those McSaver meals.
Okay. That's a good sign. But value, it only takes you so far. So what about that product innovation side of things? Anything like new and exciting happening on the menu front?
Oh, yeah, definitely. That's where they're getting really creative. They're launching this whole new core platform, calling it McCrispy.
Hmm.
And get this, they're timing it like perfectly with the festive season coming up in the December quarter. Seems like they're hoping that, this new thing will really boost sales during what's usually a busy time for restaurants.
McCrispy. Okay, I like the sound of that already. But hold on, I also saw something about a multi-millet bun in their reports. What's that all about?
Now that's interesting, right? They're introducing it as part of their, get this, real food,
Hmm.
real good platform.
Mm.
So basically they're tapping into that whole health and wellness trend.
Yeah.
It could be like a real game changer, especially if it brings in a whole new segment of customers.
Yeah.
Those people looking for healthier options, even at a fast food place.
Yeah, it's a smart move for sure. I mean, offering healthier options, that could really set them apart. It's pretty cool how, just a simple menu change like that, it can show you how what people want is shifting, and how a company's reacting to that.
Oh yeah, absolutely. And it plays into their whole brand image too. Offering healthier options, it positions them as like a company that cares about their
Yeah.
customers, and they could have some big positive long-term effects like building loyalty,
Yeah.
boosting their overall reputation.
Yeah, makes sense. Yeah, totally. So they're trying to win back customers with value, enticing them with new products, and even appealing to, the health-conscious crowd. That's pretty clever. But let's not forget about the whole digital world. I mean, that's a huge part of the fast food experience these days. So how's Westlife leveraging all of that?
Oh, they're not ignoring it, that's for sure. Digital sales actually make up like a whopping 72% of their total revenue right now.
Mm.
That's massive, right? Huge part of the business happening online. And their My McDonald's Rewards program, that's playing a big role in that success. It's all about keeping people engaged, and encouraging them to order through the app or online.
So they're not just a burger and fries company anymore. They're like a tech company too, right? I mean, everyone has to be these days. It's the world we live in. But, while they're busy conquering the online world, they're also expanding their like physical presence,
Yeah.
and pretty aggressively, right?
Oh, yeah, definitely. They're not messing around. Added 8 new restaurants just last quarter, bringing their total to 408 stores across 66 cities in India. And, they're not stopping there.
8 new restaurants. Wow, that's a lot. What's their strategy there? Are they focusing on, any specific regions or types of stores?
Yeah, they've got a few key areas in mind. First, they're looking at South India. They see a lot of potential there. Then they're moving into smaller towns, recognizing that, fast food's not just a big city thing anymore. And finally, they're really focusing on drive-thrusts, tapping into that convenience, that on-the-go lifestyle that everyone's embracing.
Right, makes sense. Go where the growth is, tap into new markets, cater to changing lifestyles. Smart. But with all this expansion, they've got to be careful about their financials, right? What's the story there?
Oh, absolutely. You hit the nail on the head. Expansion, it's like a double-edged sword,
Yeah.
can drive growth, but can also put a strain on the finances. And for Westlife, their gross margins, they actually dipped this quarter,
Yeah.
mainly because of, rising costs for fresh produce, things like that. And that could, have an impact on their profitability in the long run if they don't manage it carefully. Yeah, it's something to watch for sure.
Right. Right. So should investors be, like worried?
Well, I think it's definitely worth keeping an eye on. It's probably just a temporary thing, like markets go up and down, that kind of
Yeah.
thing. But it does show you like how vulnerable businesses can be, especially those in the food industry. They're really sensitive to things like, inflation and those external factors that they can't control.
That's a good point. Yeah. So it's like it raises the question, can Westlife manage those cost pressures, and still hit those profitability targets that they've set for
Yeah,
themselves?
for sure. That's the big question.
Well, I mean, they are working on improving their profitability, right? They've set some pretty ambitious targets.
Yeah, they have. Their goal is to hit an operating EBITDA margin of like 18-20% by 2027, which is, a significant jump from their current 12.8%.
Yeah, that's a pretty big leap. What makes them think they can hit that? Like, what's their plan?
Well, they seem pretty confident in their three-pronged approach. You've got the focus on those meal deals, like the McSaver meals we were talking about. That's
Yeah.
to attract, the price-sensitive customers. Then there's their whole omni-channel approach, combining the digital and the physical presence, making sure they're reaching customers everywhere. And of course, there's their aggressive expansion plan, tapping into new markets, all that. They believe these three things working together will drive growth and, ultimately boost profitability.
So it's a balancing act,
Yeah.
right? Trying to keep costs in check while also investing in growth and, all that fun innovation stuff.
Exactly. It's a delicate dance.
But it sounds like they've got a plan, a clear roadmap.
Yeah.
And, investors seem to be on board with it. There's a lot of positive buzz around Westlife's performance.
Yeah, there is definitely.
Hmm.
But it does make you wonder, can they keep this momentum going?
Yeah.
Especially with all the, economic uncertainty out there. I mean, inflation's still a big concern. And there's, people are even talking about a potential recession down the line.
Yeah, that's a good point. You're right. If things get tough, people start cutting back on spending. Will those McSaver meals be enough to keep them coming back for more? And can Westlife's, digital strategy keep up with how fast the online world is changing? Lots to think about.
Lots to think about, yeah, for sure.
It's really it makes you think about the challenges businesses are facing these days. It's a whole different world out there.
It is. It's a different world.
They have to be so agile, so adaptable, always innovating, just to stay ahead of the game.
Oh, yeah, they got to be on their toes constantly.
Especially in an industry like fast food, which is so competitive.
Absolutely. The pressure is on.
And that's what makes, taking this deep dive into Westlife's performance so interesting. It's like this little window into the bigger economic picture,
Yeah.
with all its complexities and the uncertainty.
It is. It's a fascinating case study.
We're seeing how, this major player in the restaurant industry is responding to all these challenges
Oh,
and trying to figure out their path to growth.
yeah, exactly.
So for our listeners out there who might be, thinking about investing in Westlife, what's the key takeaway here? What should they be watching out for?
Well, I'd say this. Westlife's, overall, there is a good spot. They've got a strong brand, loyal customers,
Mm-hmm.
and they've proven themselves in the Indian market.
Right. They're not new to this.
No, they've got experience, but, they are facing some headwinds. Customer habits are changing, costs are rising, and the economic environment, it's a bit shaky. All of that could have an impact on how they perform, in the coming months and years.
So it's a mixed bag, like we were talking about, right? Potential for growth, but some risks to keep in mind.
Exactly. It's a bit of both.
And that's where, the real analysis comes in.
As an investor, you really want to look closely at how Westlife's managing those risks. Are those cost-cutting measures working? Is their omni-channel strategy bringing in new customers and driving those digital sales? Are their expansion plans, well thought out? Are they financially sound?
Those are all really good questions. It sounds like, this depth dive has given us a really solid foundation for understanding, where Westlife stands right now and all those forces that are shaping their future.
I think so, yeah.
But it's just the beginning, right? There's always more to learn, more to analyze.
Oh, yeah, absolutely. We've only just scratched the surface.
The real insights come from, continuing to follow Westlife's journey.
Exactly. Keep watching them. See how it all unfolds.
Pay attention to those reports, watch how those strategies play out, and see how they adapt to, the market, which is always changing.
The market never stands still, that's for sure.
And, maybe even try that multi-millet bun ourselves, strictly for research, of course.
I got to do the field research, right?
Oh, so for our listeners out there, we encourage you to keep exploring, keep digging, form your own conclusions about Westlife Foodworld Ltd.
There's a lot to uncover.
It's a fascinating case study, in business strategy and innovation and resilience.
It really is.
And who knows, maybe this deep dive has sparked an interest in exploring, other companies.
Other industries, yeah.
The world of business, it's full of interesting stories.
It's an exciting world out there.
That's for sure. So thanks for joining us on this deep dive into the world of Westlife Foodworld. Until next time, stay curious, keep exploring,